Well, I think the odds just went higher that my 2 million price target will come true. Therefore, add a little more.
Hello everyone and welcome to the Daily Crypto. We are joined by Greg Foss and he will be shedding some light on the current economic conditions and where he thinks the markets are headed. But before we get started, let's take a look at the Fear and Greed Index for today. As of recording this video, it is at 24, slightly better than yesterday's 22. Currently, Bitcoin and Ethereum are trading for 19,200 and 1,287 respectively. With that being said, let's get started with the video.
A fiat currency that has increased its interest rates, so the attractiveness of lending money or holding money in US dollars has increased. Everything else being equal, a very simple formula called interest rate parity will lead you to essentially deposit money in the United States and hedge out your currency risk in the forward markets, and you can arb a higher return than if you left your money just in your domestic market. So that's what's hitting the Bank of Japan. Before I get to the Bank of Japan though, or the Japanese economy, so remember this, people. All fiat currencies are melting ice cubes. The US dollar, though, is just the best looking horse at the glue factory. Okay, that's all it is. All right, it's like you're either the best crack house on a crack street, whatever you want to call it. It's just the best of the worst.
The US dollar seems like a better short-term hedge only because of a hike in interest rates. However, it is highly unsustainable as the dollar will collapse as soon as investors realize the fact that the US dollar's fate has already been written and there's nothing that can be done to save it now.
So the yen is sitting there because they are invoking yield curve control, where their 10-year Japanese government bond, so JGB, Japanese government bond, is only yielding 25 basis points, so 1.25%. Excuse me, just a 1/4% versus the current 10-year rate in the USA, just to make the math simple, is about 4%. Okay, so there's a difference between the two countries of 3.75% in the 10-year term. What you can do is you can be a Japanese investor and you can take yen, put it into US dollars, which weakens the yen because you're selling yen, putting it in US dollars, hold it in US dollars, turn around and forward hedge your currency risk and get a bigger return back home. It's going to cost you on that forward hedge currency risk, but you're still going to make more than 25 basis points in the 10-year. It's called interest rate parity. You can't fool math. They're doing this. The problem is, so that puts downward pressure on the yen. What the Bank of Tokyo, the Bank of Japan is trying to do is defend the yen on the other side by selling treasuries out of their reserves to sell US dollars to buy yen back in the market. So you see how it's circular?
The Japanese yen is also running into a big risk as Japan's central bank is essentially exploiting the US 10-year bond yield by selling yen in exchange for US dollars. This is causing the yen to drop in value, but to counter it, the Japanese are selling their bonds in exchange for yen, which balances out. It's only a matter of time before this loop is broken, wreaking havoc on the global economy.
It's a disaster because it's circular, okay? So why doesn't it help the USA? Well, because the USA needs to raise more money for deficit financing, and the biggest holder, the Bank of Japan, is also selling. All right, so that's a pressure on the US Treasury market. Fast forward to what happened in the Bank of England. That was a similar story, but not because of yield curve control per se in the Bank of England. It was because they raised rates quickly as well, but that rate increase caused stresses in the pension funds in the UK, which employed a strategy called LDI, or liability something investing. Anyway, what it meant is they basically added margin or leverage to their fixed income portfolios because yields had been driven so low. The only way they could attain their interest rate, or excuse me, their fixed income bogeys within the pension plan was to lever it.
This whole fiasco with the Japanese central bank is actually negatively affecting the US. Since the Japanese central bank is the biggest holder of US Treasury bonds, it is harming investor sentiment because they are selling bonds to boost up the yen. To make matters even worse, they are also levered 3 times.
You know, you got to be looking, you got to have forward-looking numbers. The dual mandate of the Fed, full employment and low inflation at times like this is not attainable. One is, it's like they designed that, realizing that, well, in times of stress, you can't have both. Low unemployment as well as contain inflation. So that's the problem. But the third leg of their mandate, which is financial stability, that's the one that I really think will cause them to take their foot off the brake, and perhaps it depends how you define a pivot, but I'm going to define a pivot as saying I feel it's unlikely they will get to 4.5% Fed funds before something breaks that will cause them to have to, let's say, pivot, meaning not get to 4.5%.
Since the Fed is using the job numbers card to save its name, Greg Foss says it doesn't make any sense because job numbers and unemployment are a lagging indicator. It seems as though the Fed will continue taking harsh measures until something goes very wrong, risking the economy in the process.
I love Bitcoin because I know my kids are going to need it. And what hurts me the most is that the Fed is invoking pain on many millions of children, primarily in less privileged nations than Canada and the United States, but eventually coming to Canada and eventually coming to the United States in the form of either a global depression or the fact that they'll have to live with high inflation. You know, they've brought inflation back to the system and it will not go away quickly. So that's a hidden tax, as Mark Moss and others frequently say. So neither outcome is good. The flip side is all paths lead to Bitcoin. So I think they've painted themselves into a corner. I'm not certain they know what they're doing. That being said, I'm almost positive they have no idea the suffering that they are invoking on the least fortunate of the world.
Bitcoin seems to be the only answer to this financial mess we're in. Greg believes the Fed is acting as if they don't care what happens to the financial condition of people because those at the bottom will be affected the most.
As succinctly as I can, if it wasn't for Bitcoin, I would be apoplectic. It's just, I'm so thankful, not just of the instrument, but also of the community of like-minded people who seem to care. Having spent my career on Wall Street and Bay Street in Canada, but primarily trading with Wall Streeters, the world is probably 85% takers to begin with, right? 85% of the population of the world are probably takers and 15% are givers. And on Wall Street, it's probably more like 99% takers and 1% giver. Okay, that's just the reality. And in the Bitcoin community, it's the flip. It's like 85% of Bitcoiners are actually givers. They care. And there are certain, and obviously I'm just playing the math. I'm not going to point people who I think are takers within the Bitcoin community, because let's look at the positive. It's such a positive community of people who want to try and help.
Bitcoin is thriving because of its use cases and properties, but the community has played a big role too. Most crypto investors are like-minded individuals that understand the need for freedom in their financial matters.
Actually, I like the price action. I have to be honest. We had our Lehman moment. When I say we, the Bitcoin community's Lehman moment could have been considered early summer, right? With the US Terra and UST and Luna. And then, throw on top of that Celsius and other levered selling. Throw on top of that Elon Musk coming out and say that Tesla sold theirs. everything else considered, I mean, I think that Bitcoin has stood in there like an absolute star. But I'm not smart enough to tell you whether it's going to trade through 10,000 before it trades through 2 million. But I like the odds that my fat tail, my long tail price target is that I don't care. I'm not smart enough to tell you that you should buy it at 18,000, but let's get fancy and wait till it hits 14,000 or 10,000. Guys, that's not how you trade asymmetric return opportunities, okay? You just buy it, you keep buying it till you get to your weighting, you reevaluate as the information changes. Well, I think the odds just went higher that my 2 million price target will come true. Therefore, add a little more on weakness, add a little more on strength. Doesn't matter, because the thesis of the global fiat system unraveling is really coming fast, okay?
Greg says that Bitcoin's price action looks really good considering the fact that it is managing to hover in the 18 to 23K range even after major black swan events like the collapse of Terra Luna and Celsius. He also advises investors that the best way to trade opportunities like this is to slowly add to your position regardless of what's happening, or otherwise known as dollar cost averaging. Thank you for watching this video. Please drop a like and subscribe to our channel so you can keep watching informational content like this on a daily basis. See you guys in the next one.